All right, so we've already gone through the first 4 steps to getting credit ready, and we are now on the 5th and final step, which is how to manage your credit after you have gotten all through steps 1 through 4. So I'm gonna go over 4 steps on how to manage your credit, which may seem obvious, but I wanna take time to explain them because if you're somebody that pays your credit card balance off in full every single month, you're gonna wanna pay attention to step 4 of this. But step 1 is to get a credit monitoring service or system for you. So you really want, I know there's a bunch of them out there. You can message me or go to Doc Compton's website and he's got plenty of services and tools for it. But you want to pay attention to and you want to be alerted if a new account's been opened, if any major change has taken place on any of your accounts, or if there's been a new inquiry on your credit account. And the only way to do that is if you have a credit monitoring service or system in place for that. So make sure you get that. Number 2, pay your bills on time. Go figure, yes. Helping your credit and managing your credit means that you're paying attention to it and you're paying your bills on time. An obvious one, but I couldn't end this without stating the obvious, I guess. So 3 is managing your credit card payments wisely. And this is what I mean by that. So this is for all of those of you who actually pay your credit card balances off in full every month. This could actually affect you. So pay attention. 1, the way that the credit card companies work is they report what your balance is to the credit card agents or to the credit agencies once a month. And guess when they do it? They do it a couple days before the due date. Guess why? Because typically people pay their credit card balance on or a few days before their due date. And so what they want to do is they want to report the highest balance to the credit agencies because it could impact your score. There's a lot of business reasons and money reasons, of course, why they do that. So what you want to do is you want to call the number on your credit card statement on each credit card that you have, and you want to specifically ask each company when they report to the credit bureaus. They could say the 5th, the 6th, the 15th. You want to know what that magic date is. You want to write it down, and if you're somebody that pays the balance off in full every month or not, you want to make sure that you're paying that balance or that payment 2 days before the date that they report to the credit bureaus. Why? Because then it will look like your credit to limit usage is a lot lower. So you want to make sure you have what that date is. Otherwise, if you're, like, example for me, I put everything on my credit card and then I pay it off every single month. So my credit card balance can get up there, and if I didn't make the payment before that date, it would look like I have a heavy balance on my credit card statement, but I pay it off in full every month. That trick alone can help increase your score insane amount of points, like ridiculous amount of points. So call the credit card companies, find out what that number is, and then last, pay the bill a couple of days before that date. So very huge. Number 3 in that is huge. So 4th is you do want to limit your credit inquiries on your credit report. Now, this is the number 1 question I get. Well, I'm shopping mortgage lenders or I'm shopping auto lenders and I don't want my credit to get pulled, so I don't want to pull my credit with you because I just had my credit pulled last week and talked to a loan officer and blah, 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 blah. Here's the thing. Thank God the government regulates this kind of stuff and they're in your corner, not the creditor's corner. So they want to protect you and they ultimately want to make sure that you get the best, let's say, mortgage rate, or they want to empower you to be able to shop for that car or that mortgage. They don't want you to be penalized for it. So if you are shopping for a car and a mortgage and you're within a 15 to 30 day window where you've got a couple of pulls, it's going to lower your score about 2 to 5 points. That's it, because it's a short time frame and it's within the same industry. Now, if you had your credit pulled from an auto lender, from a credit card company, and a mortgage company in 30 days, well, that's 3 different credit pulls from industries. You're going to get hit. But if you got your credit pulled from 3 different car dealerships in a 15-day window, you're not going to get penalized for each inquiry. They're going to view that as you shopping for a car loan, and they're not going to penalize you for that. So keep that in mind. You do want to always get the best rate, and don't let that prevent you from going out and to shop. But that is your 5th and final step of being credit ready. So the first one was get a copy of your credit report. The second one is understanding how to read the credit report. The third one was how to handle errors. The 4th one is managing and establishing good credit. And the 5th one is how to monitor it. So hope that was helpful. Again, if you have any questions, you can contact myself or Doc Compton. and we'll make sure to get you credit ready so you can buy your next home. Take care.